Good day, learners. I once again welcome you to study section 2, where we are going to be talking of audit of group accounts. But before then, I want us to do a recap of what we have learned in study section 1 on audit sampling. You recollect that we were able to describe what audit sampling is, and also to be able to realize that audit sampling is one of the many areas that assist us to select items for audit testing. Aside from that, we're able to see the types of sampling being categorized into non-probability and probability sampling. Aside from that, we are also able to see the processes and procedures of conducting an audit sampling. And of course, finally, we realize that no matter how audit sampling is desirable, there are some circumstances where 100% check is not only desirable, but is the best thing to do. In study section 2, we are going to be talking about audit of group account. At the end of this section, you should be able to explain the meaning of group and specific audit considerations of group accounts, and appreciate the meaning of specific planning problem associated with group audit. First, let me also state that whatever we have learned so far in auditing or the conduct of audit engagements is also applicable to a group of companies, but it is applicable individually but not as a group. So here in this study section, we're going to be concentrating more on specific areas that sets audit of group accounts apart from individual companies' accounts. First, what is a group? A group consists of a parent company with either wholly and or partly owned subsidiaries, associates, and that is where the holding company can exercise significant over their affairs, and other related parties such as partnership and joint ventures. A group exists where a company has the power to control another company. Section 336 subsection 1 of CAMA provide that at the end of a financial year, a company that has subsidiary or subsidiaries, the directors shall, as well as preparing individual accounts for that year, also must prepare group financial statement, being accounts or statements which deal with the state of affairs and profit or loss of the holding company and its subsidiary, prepared as if they are one. Without wasting much time, let us look at the audit consideration in group accounts. The audit of group account follow basic principles, guidelines, and standards for the conduct of a typical audit engagement, just like I have earlier explained. The basic principles of planning, documentation, and control is also applicable. Guidelines and standards for the conduct of typical audit is also applicable. But however, we need to know here that there are two personnel dramatics here that are important. The first is the principal auditor, which is usually the auditor for the holding company, and of course secondary auditor, or as it is stated now, the principal auditor and the component auditors. The auditors, group, primary, principal, or lead auditor, who signs the group audits, are responsible for all matters arising from the audits, even in respect of subsidiaries not audited by them. I need to quickly point out here that being an auditor of the holding company, or being an auditor of the components, or being an auditor of the components or auditor of the holding company, they are separate engagements. And more importantly, the auditor of a group and the auditor of the holding company, they are independent and separate audit engagements, which these auditors that are affected should plan for and should also note. Most times, the auditor for the holding company is usually the group auditor. But however, if that is the case, the group auditor should see that it is a separate engagement. Concerning the primary auditor, who is the group auditor? He is also called the principal auditor and is responsible for reporting on the financial statement of an entity, including that of subsidiary or components audited by another auditor. Matters to consider as primary or principal auditor, among others, include materiality of a portion of a financial statement he is to audit. It's very important. What proportion of the group or of the component is he going to audit? Usually, typically, and the best is he is seen to be auditing significant parts of the components of the group. Again, he also considers degree of knowledge of the business of the component he has. The risk of material misstatement in the financial statement audited by other auditors, very, very important here. The performance of additional procedure regarding the components audited by other auditors. Responsibilities of the primary auditor on holding company's account. 1. Audit schedules to the account. Verification of existence and ownership of investment in the subsidiary's account. And of course, verification of current and loan accounts with subsidiary. But the responsibilities of the primary auditor on the group account, among others, include forming opinion on the truth, fairness, and compliance with statutes of account of each company in the group. Very, very important. Even including those that he has not audited. And of course, forming opinion on the group financial statements as a whole. As far as secondary auditor is concerned, these are called component auditors too, and it is the auditor to subsidiaries account in the group or other components. An account audited by the secondary auditors may be included in the consolidated group. The function of the component auditor is basically with respect to the component he or she has audited. Then let us look at the responsibilities of the primary auditor on the secondary auditor. When the primary auditor intends to use the work of secondary auditor, he should consider the following. That is, he wants to place reliance on the work of the component auditor. 1. He should consider the professional competence of the secondary auditor or the component auditor regarding the assignments. How competent is he professionally? Is he also a member of his profession? He may also discuss with the other auditor about the audit procedure applied, and if need be, he tells him to do more in the instructions that he will be given. He also reviews the written summary of the component auditor's procedure. He must also satisfy himself with respect to the account audited by secondary auditors, with respect to the accounting policies, availability of information on subsidiaries and other components, scope of the work of the other auditors, materiality of subsidiary or other components to the group. Then of course, cooperation between auditors, reporting consideration, and of course, division of responsibilities. Being as it may, there are communications which has to be going on between the principal auditor or the group auditor and the component auditor. Where the group auditor gives instruction, the component auditor, in writing, the group auditor does that as a memorandum, and there is every need for them to cooperate and share information, especially with some component that the group auditor is not concerned with during the audit. In conclusion, let us look at the specific planning problems that are very, very important. The specific planning problems which the audit of group finance creates include reviewing the respective size and location of all operating units and components of the group. It is also important that the group auditor audits a significant proportion of the group finance statement. Otherwise, they may not fully understand the business of the client and the likely risks that may arise during the audit. Again, the group auditor should have knowledge of all group activities in order to be able to evaluate the risk of material misstatement arising therefrom. Again, the group auditor too will need to consider management arrangement for preparing the consolidated financial statement. Those are the specific problems that are usually associated with audit of group accounts. Other considerations which I want to quickly talk on before I close this study section is the need for cooperation. I've explained that, the cooperation between the other auditor and the group auditor. Then again, Reporting consideration is also very, very important. When the principal auditor concludes that the work of the other auditors cannot be used, and the principal auditor has not been able to perform sufficient additional procedure regarding financial information of the components audited by the auditor, the principal auditor should express a qualified audit opinion. Very, very important. Or a disclaimer of opinion, because there's the limitations in the scope of the audits. Thank you very much. I will see you in study section 3.